Hey, what's up, guys? I know we normally don't have too many people on Fridays, but anyway, the session I'll record it. Share screen. All right, good morning, guys. Today is Friday, October 13th. And looking over what we have today. So US 30, bullish daily bias since a couple of days ago. Gold since 2 days ago, daily bias was bullish. Wait, this should be bullish, not bearish. Copy. Guess I hadn't saved it anyway. This is bullish, bearish. Okay, yeah. So gold as of 2 days ago, when the SAR on the daily closed above, or when the daily closed above this buy SAR, daily bias shifted to bullish. EU daily bias is still bullish. The last daily closure was bullish as well. The dollar daily bias bearish. So going over what we have right now, for me, this is the only trade I'm in right now. And this is off and I'll go over the rejection indicator. This is off of the double SAR. So if you go here for EU on the hourly time frame, we have a double SAR zone on the hourly time frame. So this double SAR zone, it's like a 6 pip zone. So the distance between the top and the bottom zone is 6 pips. Then we had the test candle. So the first candle tested that zone. So that's your test candle. The next candle, consecutive candle, closed above it. So that's your rejection candle. So that's a test and rejection in the direction of the daily bias. So that's why I entered that trade. Went up into profit about 242. So it was a 25 pip stop loss, 50 pips TP. So went up in profit about 20 pips. So I'm still in the trade. I'm going to hold it regardless of whatever happens. So for me, I always hold the trade when it's at a 1:1. I go ahead and set break even. So EU was the only thing with the hourly time frame. On the 4-hour time frame, there was nothing for EU. Wait, give me 1 second. 273. No, this is too big of a zone. So nothing on the 4-hour time frame for EU. Going for gold. So gold literally broke through everything. So we had a double SAR right here. So this was a break and continuation. However, the entry validated up here, but even for me, it's not a trade I could have taken because I need my stop loss, because my stop loss on gold is normally 30 pips. So for me here, my stop loss wouldn't have been below the SARs, but right, it still went up. But anyway, for me, it's not a trade I would have taken. I was waiting for a retracement of gold to this 1878 zone, but gold did not give that retracement. There was nothing on gold on the 4-hour time frame. So nothing on gold on the 4-hour, and you can see how gold has spiked all the way up. We have another zone here for gold. This is a 1915, 1913. So we have a double SAR here between 19. Give me 1 second. Let me see the distance between this two. So the top SAR is at 1915. The bottom one is at 1913.5. So it's, yeah, it's big. I wouldn't consider that as a double. For me, the SARs on gold, the maximum distance has to be no more than 10 pips. So that is 15 pips. My stop loss is 30 pips. So it is, if you want to consider, but for me, I'm not going to consider it, but I can see for somebody who's doing like a 50 pip stop loss on gold, this can apply as a double SAR for them. But for me, I'm just not going to mark that up for myself. US 30, we broke above this double S. Actually, it was a triple SAR zone that was down here. So this zone was a triple. The zone above 33,693. The one at the bottom 33,682. That's a 10 pip, 13 pip zone. That's perfect. I was also waiting for a retracement for US 30, but US 30 has kept pumping. But you can see right here, we have another double SAR that's currently being broken. So we can have a break continuation, but for me to take this trade, it has to be in another 2 hours, or actually an hour and 15 minutes. So at this point, we have to go down to the lower time frames. So on the lower time frames, we had this double. This was actually a triple S. No, I'm sorry. No. This was a double SAR on the 30-minute, double SAR also on the 30-minute. So we had a break and continuation for both of these zones. So this trade validated during market open. I didn't take this trade. Again, we have two SARs right here. It could have satisfied if you're trading this top one, because your stop loss would have been below this one. And also the distance between your entry and the SARs was like 40%. So that's fine. But the reason I didn't take it, was during market open. I don't take any trades when the market is opening. So I normally wait for after market opens. But anyway, so whether it was the bottom one, whether it was this top one, the trade would have hit full TP, 50 pips stop loss, 100 pips TP. So I'll just go ahead and delete this because that trade already went through, and then just look for another one. So here, I think we have zones on the 15-minute. So currently, we still have a double SAR on the 30-minute. This big zone right here, 33,777 and 33,758. That is also a double SAR on the 30-minute. So the current 30-minute candle will be the break candle. And then we would have to wait for the next 30-minute candle. So I'll go ahead and mark this up as a possible break and continuation. Right there. And then I'll mark this up this way. Break and continuation buy. So it's still not, even the first candle has not validated yet. So yeah, but anyway, so that's a possible break and continuation. To take this trade, you'd have to wait for another 45 minutes, because that's when the trade will either validate or will invalidate. So it's this one, 50 pips TP, I'm sorry, 50 pips stop loss, 100 pips TP. So that would be the trade that in another 45 minutes may validate. So going down to the 15-minute time frame, I think these zones up here are 15-minute SARs. Yeah. Okay, wait. So we have a break. So we have a possible, so forget the 30-minute for now. I'm going to use this markup for this. So we have 13 minutes. So I'm going to use that 30-minute markup for this one. So this is also a possible break and continuation. So this is a double SAR on the 15-minute time frame. We have the break candle. So this would be the continuation candle. Red flag for this trade. This trade right here, you can see how the opening candle was heavily bullish. But anyway, we'll see where that 15-minute candle will close, and I'll see if I want to take that. Let me see what zone is this one all the way to the top. It might be a 30-minute zone. So I'll come back here to the 30-minute. This zone, okay, yes, this zone to the top is a 30-minute zone, so that's fine as well. So we'll see how this 15-minute candle closes. I would want it to close next to this SARs. But again, red flag for this trade, the overextension of the market open. But anyway, we'll see how that goes for gold. So for this candle, check in 12 minutes. So that will be at 10 a.m. So based off of where gold is right now, I can tell there's no 30-minute SA unless you extend the chart to the left. That's the only way you can find something. So this right here is 1902, 1901. This is a double SAR on the 30-minute. I don't like extending too far. This is 1910, 1910. So no, that's too big, too wide. Let's see. I really don't like going this far out. So this is 1913. 1912. Okay, that's a triple. And we have, this is the last one I'm going to mark up. And again, this is on the 30-minute time frame. Okay, so if I come back here, we should see those zones. So this is on the 30-minute time frame. extend this. Okay, so this was already break and continuation. This trade was validated at the top here. So of course you wouldn't have taken this trade because of the overextension and your SARs. No, this should be 3,061. So this was the break continuation. The entry would have been there, but of course, this is not a trade you should have taken because your stop loss needs to be below the SARs you're taking. So that is not a, so at this point, what I would want to see, you would want to wait for price to retrace. So there's a trade that has already validated on the 30-minute time frame. So what I would want to see, I want to see gold retrace to this zone. And when gold gets to this zone, I will drop down to the 1 minute and look for a buy of a live SAR on gold. So right now, I already know that there's a trade that has validated there. For this second zone right here, you can see we had a break, but the continuation candle closed below. So there's nothing for gold for this particular zone for now. The only trade that can be given for this bottom or middle SAR is a break and continuation. But I would want to see gold retrace down and come into this double sell SAR zone around 1901, 1900 area. So that's a critical psychological level for gold. And in this zone, I will go down to the 1 minute and I will look for a buy on gold on the 1 minute time frame. EU again, for me, I'm still in this buy on EU. I'm still holding this buy on EU. So I'm not going to look for anything on the 30-minute or 15-minute timeframes as much as I do see some entries, but I will stick to my 1 hour entry because it's whatever is happening on the 1 hour is also happening on the 30-minute and on the 15-minute. So I'm not going to look for anything right there. So for this US 30 trade, I want this current 15-minute candle to close next to this SARs. If it does not, right, and I do the math and I see my entry relative to my SARs is far away, I'll just do what I'm doing for gold right now, wait for a retracement and wait for US 30 to come to this zone. And when US 30 gets there, I'll just drop down to the 1 minute time frame. Now, the other thing I'll go over right now, unless anybody has any questions regarding any of these setups. Again, EU is not an official trade. That's just a trade I took personally. So whether it hits TP or stop loss, I'm not going to count it as an official trade. So the only probable official trade is if we get this US 30 buy or if we get this gold buy right here. So I'm waiting for gold to retrace down to this zone. And this is the zone I would be looking to buy gold. So this one, and I'll mark up what it's based off of. It's based off of a break and continuation. Break and continuation buy, yes. So it's no longer possible. Break and continuation, it already validated. So it's a outright break and continuation. We just need to wait for retracement. Now for the rejection indicator. So I shared this indicator with everybody who has access to the indicator subscriptions. So this one is, it's not a replacement of the SAR strategy. It's actually, it's meant to supplement the SAR strategy. So for all of my indicators, I have buy and sell. Again, I don't trade with buy and sell signals, but I know there are people out there who had requested me to translate my logic for all my strategies into indicators, which I've done my best to do. So unfortunately for the SARs, the break and continuation, the tests and rejections, it was impossible to code signals based off of that. But I remembered that I had, and I was talking to Audrey, and I think Audrey is in here. We're trying to see some of the, right, how can we identify some, and I know that US 30 trade will validate in about 7 minutes. So I'll go back to the charts in about 7 minutes. So it was, how can we, as much as we have, so for example, here, if we go here on, and gold was a perfect example for yesterday. So here on gold, the bias is bullish, but it doesn't mean that you're buying at the top, right? So what you don't want with any indicator or any EA is to be buying at the top and selling at the bottom, because what happens when retracements do come, because markets are cyclical. So sometimes market will trend, sometimes markets will consolidate, sometimes markets will reverse. Now, the goal here is to see, okay, what tool can we use to give us a warning that, hey, maybe the trend right now is changing from, or the bias is probably going to change in the next few days from bullish to bearish or from bearish to bullish. A good idea here is that this whole time, for me, since Wednesday, September 6th, I was just doing sales on gold. I was looking for sales on gold this whole time. Now, here with the reversal indicator, rejection indicator, you want to use it together with the SARs. So on the daily time frame, if your bias is bullish on the daily time frame, you want to set and we'll go step by step. If your bias is bullish on the daily time frame, you want to set the rejection indicator to sells only. So I'll give you an example here. I'll go to my daily bias, and here I have the rejection indicator. So in the rejection indicator, you have the option to change either to do buys or sells only. I don't recommend having both, but if you want to, that's fine, but I do not recommend that. So assuming we were using it this day, so I'll just go ahead and hide this and try to replay this. So as of this day, my bias for gold changed to bearish. So if we had this indicator at that point, I would have turned off the sells and turned on the buys only. Now, if you want to leave this 3 on, you can play around with them and see what it does. But so it's straightforward: double wick rejection, double body rejection, single body rejection. So by default, it comes on when show Bollinger Band squeeze is enabled, and the style you have both the HMA1 and HMA2 enabled. So that just gives a lot of things on your charts. I don't like having my charts too complicated. So you want to turn off the second HAL moving average. So on this one, we're going to use under the moving average type. We're not using EMA on this one. We're using HAL moving average, HMA, and you want to set this as 9, turn off Bollinger Band squeeze. You don't need that unless if you backtest, you find that you need it. So HMA, used 9 on here. And then on the daily time, again, if you haven't understood the SAR strategy, this is not for you just yet. First, understand the SAR strategy before you start looking at this. I know, let me see for that US 30 trade. Okay, still going. EU also is pushing up. Okay, so for this one, and this is again only on the daily time frame. So on this day, since at this point my bias would have switched to bearish, I want this indicator to tell me when maybe the bears or the sells are starting to be overexhausted. So here, I would keep selling gold. I would keep looking for sells on gold here until, okay, so see what happened, until I get the rejection indicator giving me a buy. But here's the thing. If your bias changed today to bearish and then the indicator for the next day or for the same day gives you an opposite, ignore that. This is why in the instructions I've put in the weekly time frame. So okay, a good warning is when the opposite rejection signal of your daily bias occurs about a week after your daily bias SAR was formed. Anything before this is to be considered a minor retracement. Now, here, as much as the rejection indicator gave me a buy, I'm going to keep looking for sells until the weekly threshold is over. So until 7 days from now. So 7 days from September 6th would have been September 14th. So I'm only interested in considering a rejection signal for a buy on September 14th. So here, no red flag. I would keep looking for sells. Okay. So I keep looking for sells, and you can see price keeps selling. Okay, what day is this? September 14th. So here, I've possibly already made money in that 1 week. So here, when I get this buy on September 14th, okay, then maybe it's time to hold off on the sells. Okay, so at that point, I can decide to hold off on the sells. And then maybe at this point, then I'll also turn on again. If you haven't understood the SARs, this might be confusing to you. So just take your time. So at this point, when I've held off on the sells, but my daily bias is still bearish, I can turn on the sells inside the rejection indicator and then wait for another possible sell to show me a momentum. So you see this? So this is tricky here. So you got that sell on the closure of this daily candle, but you also got a buy SAR. So what is this telling you? This is telling you that maybe the sell bias. So here, here's the thing, the daily bias does not change. So the purpose of the rejection indicator is just to give you a warning. It doesn't, you shouldn't, because it gave you a buy here, you shouldn't stop buying. Your daily bias, unless you want to use it as your daily bias, remember, there's a difference between the daily bias and okay, so for this US 30 trade, let's see in 14 seconds, and then I'll go back to that. So again, keep in mind, US 30 is pumped up a little too much to the upside. So you want to be careful with this trade. If you do take this trade, use a 0.375% risk. And I am in that, it happened too quickly. So let's see. So if you enter it, use a 0.375% risk, 50 pips stop loss, 100 pips TP. Again, it's Friday. Price is, you can see the extension to the bottom here. So expect a lot of manipulation. Best to wait for this gold trade instead of this US 31. So I know it happened too quickly. So if you're not already in, hold off. But if you enter, use a 0.375% risk. So whether it hits TP or stop loss, I will count that as a 0.375 loss. So for this one, right, I'd mentioned that red flag right there. This overextension, this straight pump to the upside, but just monitor that. But if you did enter it, that was a minus 0.375, and I'll just record it there. So this is the key, right? Always, it's up to you to make those decisions, whether you want to jump in or not. For me, I'll do my best to give you guys any red flags. But anyway, so I'll go back to, and if this comes back up, so even for me, I jumped into that trade. And if I'm not wrong, I don't know if it failed, but I may have gotten stopped out as well. But for me, right, I normally jump into trades. So long as the trade is valid, I really don't care about the stop loss and all. Just make sure you're managing your risk properly. But if it goes back up, okay, so I'm still in the trade. I think due to how it happened so quickly being slipped. So I'm still in the trade, but whether it hits, if it hits TP for me, I've already recorded it as a loss. So maybe hopefully for you guys too, if you entered, you are in profit because volatility just happened too quickly and you're slipped in or out. But personally, I'm still in that trade. I did not get stopped out and I'm still going to keep holding it. So anyway, let me go back to this one. So on the daily, right? The purpose of the rejection indicator is not to change your daily bias. It's just to warn you that, hey, your daily bias might change. So your goal is not, if you're looking for sells and you get a buy on the daily time frame, it doesn't mean that you start looking for buys. It just means hold off on looking for sells until you get another confirmation to keep looking for sells. It just says, wait a minute, let's see what's going to happen. So here at this point, right, keep in mind, you need that 7-day threshold. So from the day your daily bias changes from bullish to bearish or bearish to bullish, count 7 days so that you're not confused by those signals that show up. So here I said at this point, when we had that buy here, instead of continuing to look for sales, just hold off and wait to see what happens. Okay, so at this point, you keep waiting, and this would have saved you in this drawdown to the upside. So you can decide to trade. I mean, that's up to you. But for me, I don't recommend doing that. I'll show you guys the time frames that I recommend using the rejection indicator to trade. Now here, at this point, this is where we were before we got into that US 30 trade. So at this point, two things happen. We have a sell on the rejection indicator, and then we have a buy SAR that has just been formed. So here, what this is telling you is that as much as you should continue, or you should, it's also an indication to keep looking for sales using your daily bias. Hey, there's a buy SAR that has been formed. So also here, maybe just wait to see whether you'll get a daily candle, because it's only like what, 80 pips difference. So maybe wait to see if you're going to get a daily candle closing above this zone, or wait to see what's going to happen. So here, if it was me, I would have waited. So at this point, you can see the daily candle attempted to close above the buy SAR, but was rejected again to the downside. So at this point, when I see this rejection, I would have just kept looking for sales, because I've seen that rejection until a daily candle. So remember, the daily, I'm not changing the daily bias. I'm not changing the analysis for the daily bias. I'm just changing when to start looking for a change in momentum. So at this point, guess what I would do? I would turn off the sell and then leave the buys, and then I would keep looking for sells. So here, my daily bias would keep, right? I would keep selling and selling and selling. Yes, this buy showed up here, but what's the red flag of this buy? Since you came back to your sell bias, it hasn't been 7 days. So you keep, I'll pause this. So here, I'm going to keep looking for sells and sells and sells. So at this point, what happens? There's a buy that has been formed. Okay, how many days since your change in bias was there? So here, your bias continued to be sell. So actually here, between these two SARs, your daily bias did not change. Your daily bias was still selling. So here, even though you want to consider this as a continuation of your bias, how many days are those? So this is 26 September. The time this comes up is 6 October. That is 7 days. So that lines up with the threshold of this requirement. Requirement number 1, make sure you have that weekly time frame. The difference between when your daily bias was formed or when your daily bias changed to when the rejection indicator is giving you the opposite signal has to be 7 days. If you try to trade in between those 7 days, you're going to keep asking me questions, and try to, to be honest, I'll keep referring you back to those requirements. If, for example, here you tell me your daily bias is bearish, and then the next day buy shows up on the rejection indicator, then I clearly know that you have no clue how I'm talking about the rejection indicator, and I gave you this screenshot right here. So make sure that you have that 7-day threshold. So at this point, what I would have done, yes, my bias hasn't changed. My bias is still bearish for gold, but then 7 days later, the rejection indicator gives me a buy. So what it's telling me is that, hey, I know you're still looking for sells. I know your daily bias is still selling, but the trend is possibly changing. The other thing you want to make sure here is that make sure. Remember, rejection. What does rejection tell you? Rejection tells you that if it's being rejected to the downside, we have a lot of buyers on that area. So if the rejection is for a sell, it means you should see a bunch of wicks in and around that candle that gave you that rejection to the downside. If you're being rejected for a buy, then that means that you should see wicks to the bottom. So you see this? So there are wicks to the bottom. Okay. So here at this point, and since I was still trading with you guys live, I would have kept looking for sells. But before then, I didn't have this indicator. So at this point, maybe it's time to chill and stop looking for sells, because, hey, if you've made money for 2 weeks straight looking for sells, and this US 30 trade, so for me, eventually I got stopped out. I know I was slipped up, but US 30. So the red flag for this trade, again, this overextension, I know we have a fair value gap. So that was a red flag for that trade. But for me, again, if a trade is valid, I don't care whether I'm going to hit TP or stop loss. That's just something different. So for this one, got stopped out on that 0.375%. I told you guys 0.375, but for me personally, I do 0.75% risk per trade. So I'm out of that trade. The only other trade I talked about is this gold trade. So you'd have to wait for a retracement of gold down here. Anyway, let me go back to this to this rejection one. So anyway, at this point for gold, the best thing I would have done is to stop selling gold, especially if I was using an EA. But I'm pretty sure there were also entries, SAR entries right here. So you pause, you hold on sales for gold. If you want, sure, you can start looking for buys. I don't recommend taking signals based off of the rejection indicator by itself, especially on the daily time frame. So here, what are some of the other requirements of the rejection indicator? So I told you, right, in the settings, set HMA, not EMA, set 9, and you only need one HMA. You don't need both. And then I told you, you can use the rejection. Okay, so let's keep number 3 for now. What am I looking for? I'm looking for, okay, yeah, this number 3. So here, okay, so let's assume, so forget about the first paragraph of step 3 and the second one. Let's focus on this last paragraph. So what you're looking for a rejection signal, this is what you're looking for. You want the rejection signal. So how this indicator is coded, you have that HMA line, right? So this line here is HMA. So if price breaks and closes above the HMA will turn green. If price breaks and closes below the HMA will turn red. So note that if price breaks above whatever time frame it is, if price breaks above whatever value of HMA you've put in there, the HMA will turn green. If price breaks and closes below, the HMA will turn red, or whatever I said. So up for green for up, red for down. So here in this number 3, so you want, there's a reason why I say that. So ideally, you want to take a signal that forms above or below the previous high low, and within the HMA. So a rejection signal that forms within the HMA, and ideally you want the candle, the candle signal that you get to be above the previous high or low. So I'll give a good example here for gold. So here for gold, the HMA signal, or the rejection signal is, what's the color of the HMA? The color of the HMA here on the daily was green. Now, the only rule that this candle does not satisfy, and keep in mind, this is on the daily time frame, you'll see the daily time frame, it takes a while for some of these rules to satisfy, because a daily candle has 24 1-hour candles. So you have to keep that in mind when using some of these rules, especially the high-low one, which I'll show you on the 1 hour. So what I would have wanted here, ideally, I would have wanted this daily candle to be above this low right here. But this daily candle, it does satisfy being inside this HMA. So if I'm looking for a rejection and the rejection is supposed to show me that price is reversing up for a buy, I want this buy to be inside this green HMA. And I'll show you an instance where there's buys that show up when the HMA is red and why those would be red flags. But anyway, here the only rule that it doesn't satisfy is it being, since it's a buy rejection, it is the last candle of this downtrend. So I would have wanted this candle to be like above this high low, so not to be the lowest candle. But anyway, so if we keep going, you can see at this point, the warning would have worked for us. The warning would have been, hey, I know you're biased, because even for me up until this point, my bias was still bearish on gold. But because of that warning, maybe I could have pumped my brakes and maybe stayed out of the markets until the now new bullish bias comes in. So here's the thing, you don't have to trade every day. If you are taking sales like me for 2 weeks in a row, there's no profit, chasing this little last profit right here, it's not worth it. So you could have either done 2 things. If you are probably using whatever EA you're using at this point, and you're doing sales and sales and sales only at this point, turn off your EA and wait for time to for your bias to change to bullish and turn on buys only. Or if you want to take the risk, sure, start buying down here. Again, you don't have to trade exactly like I do. My job is just to show you the direction. So at this point, you can see how this rejection would have worked so good for us to warn us that, hey, this daily bias is changing. Okay, so then you wait. What happens here? A buy SAR is formed on the daily. That is perfect. So when at this point, when this buy SAR is formed on the daily, and the daily candle closes above this buy SCR, guess what? I'm done. My daily bias at this point, only at this point has my daily bias shifted from bearish to bullish. The reason I do not use this rejection, and I don't recommend using the rejection signals for a daily bias, is how frequently they show up. So you can see here, if I turn off the other one, during this little period right here, one day you're selling, one day you're buying, one day you're selling, the next day you're buying, the next day you're selling. So it's just too much change in your daily bias. Your daily bias should not really change that frequently. So at this point, when my daily bias now shifted from bearish to bullish, then keep in mind on the daily time frame, that is when you do the opposite. On the daily time frame, that's when your daily bias and the rejection indicator should be opposite. Not on any other time frame, only on the daily time frame. Let me make that clear. So at this point, my daily bias is bullish. I will turn on sells only for the rejection indicator. The reason here is that I want a warning when the bias has started to shift, or maybe the trend or momentum has started to shift. So here you'll see for yesterday, guess what? We got a sell. So keep in mind again, this is invalid. Why is it invalid? Because how many days was it? How many days has it been since your bias changed? So at this point, on Wednesday, that's when. So actually, this was the close of day Wednesday. So my bias on Thursday, which was yesterday, that's when I started looking for buys on gold. So what you can be confused here is that if you try to use this to go against your daily bias, is that it can be telling you that, hey, okay, on Thursday, you started looking for buys on gold. However, at the close of day Thursday, you've gotten a sell signal on the rejection. That is invalid. So this is the key thing, that you have to wait 7 days. So ignore anything that is opposite your daily bias for at least 7 days. So here, guess what? I was still looking for buys on gold. Even when I'm running my own EA, I was doing buys on gold since morning yesterday. So this whole time on this down move, my EA was accumulating buys on gold. Even personally, when I was trading on the live session with you guys yesterday, we were looking for buys on gold. So it doesn't mean that gold is going to go up as soon as the daily closes above the buy SCR. No. Retracements are part of the game. So this is just a short-term expected retracement. So please, I don't want questions of, oh, your daily bias shifted to bullish and then you got a sell bias the next day. What should you do? Again, 7 days. Unless 7 days have elapsed, I don't care if I get sells here. So guess what I keep doing? I keep looking for buys on gold, and you can see this pop to the upside. So is there any question on how to deal with the daily, how to use the SAR and the rejection on the daily time frame? Again, we're going to go step by step for the daily, hourly, 4-hour, 30-minute, 15-minute. Does anybody have any question about how I've gone over the daily bias and the rejection? So I don't want a question of, oh, what would you have done for this sell signal right here? I don't want that. If you're going to ask me this question about this sell signal right here, and I've just gone over why I don't care about it and why it's invalid, again, you do not understand, or you probably should just not use the rejection indicator. So does anybody have any question or wants me to clarify something that I've already gone over for this daily time frame before I move over to the 4-minute time frame? All right, so everybody's set on the daily time frame and how to use the rejection indicator. All right, so at this point, at this point, I got my daily bias. Yesterday, was it my daily bias yesterday? So close of business Wednesday. So since yesterday, I'm still bullish on gold. So for right now, I am still going to keep looking for buys on gold until two things happen. So until my daily bias will shift to bearish if we get a daily closure of a red SAR. So whatever happened here, if we get a repeat of this, That's the only time I'll shift my daily bias. Okay, when is the time that I'll take it easy on my buys on gold? The times I'll take it easy on my buys on gold is if 7 days from now, so 7 days from yesterday, so yesterday is when my bias changed. So that's Thursday, October 12th. So on Thursday, on next Thursday, October 19th, if we get a sell signal from the rejection indicator on the daily time frame, that's the only time I will chill on the buys. But if I get a sell signal today, if I get a sell signal Sunday, if I get a sell signal Monday, Tuesday, or Wednesday, I will disregard that sell signal off of the rejection indicator because it falls within the 7-day period since my bias changed. So it's as simple as that. Don't try to overcomplicate it. Don't try to don't let these things confuse you right here, because if right here you got confused and got out of any buys you had, you would have just lost profit. Because keep in mind, the key thing here, the daily bias to me is always king. The daily bias is always king, and will always, well, not always, for now, at this moment in my trading, the daily bias will always take precedence over the rejection indicator, over the crosses indicator, over the order blocks. The daily bias will always take precedence over that. Okay, so now I've gone over the daily. Again, if anybody has any clarification I need to make on the daily, please go ahead and ask. Okay, now after this, what's my next step? After I normally go over my daily bias, so at this point, I don't even need the rejection indicator on my chart. So I go ahead and turn it off. So here, then I go down to the 4-hour and 1-hour time frame. So here, just for this one, and it's the same ideology, whether it's the 1 hour, whether it's the 4-hour, this is the same thought process. So and I'll use 1 hour because there's a good example here for gold yesterday. So here on the 1-hour time frame, and let me expand this a little bit. Okay, so here on the 1-hour time frame, first I want us to consider because there's a reason I wanted to pull this up. So you guys remembered in this part, in the last part of requirement number 3, you want the rejection signal to form within the HMA. So what did I tell you guys? I told you when price closes above the HMA turns green, or whatever color you want to set it. If price closes below, the HMA turns red. So the idea here is that if you're using the rejection indicator for whether it's to slow you down or to warn you on the daily time frame, whether it's to take trades here on the 1 hour or 4 hour, I'll be demonstrating how to take trades with it. Whether it's on the 1 hour, 4 hour, whatnot, if you're using this requirement of the last paragraph of step 3, that the candle, the signal needs to be within the HMA, that means if I'm looking to buy, I want the HMA, I want the candle to be above the HMA. That means I want the HMA to be green. So you don't want to be taking, you'll see buys that are fired, but the HMA is red. So for example, here, if we go here on this hourly time frame, you see all this all these buy signals up here, right? You see all these buy signals up here. What's a red flag of them? They are below the HMA. So what's the color of the HMA? The HAL moving average, it's red. So if you're buying, you want the HAL moving average to be green. If you're selling, you want the sell signals to be under the HAL moving average. So you want the HAL moving average to be red. So this is just a red flag right here of the of those ones. So again, this is the hourly time frame. So same logic for the 4 hour. So once you go down to the 4 hour, to the 1 hour, to the 30, 15 minute, 5 minute, 1 minute, you want, if your daily bias is bullish, you want to set buys, you want to check buys only for the rejection indicator. Again, if your daily bias is bullish, you want to select buys only. If your daily bias is bearish, you want to select sells only. This is the difference between the daily time frame and the 4 hour and 1 hour time frame. Remember here, on the daily time frame, they are opposite. If you're bullish, this you should have sell signals on the rejection indicator. If you're bearish, you should have buy signals, because the reason you have that opposite setup in the daily time frame is because you want a warning of a possible trend change. And because a daily candle has 24 1-hour candles, a daily candle has 6 4-hour candles. 6 4-hour candles, if I'm not wrong. So that is the reason. So the daily candle, in the grand scheme of things, moves slower. You will get fewer signals possibly than compared to the 1 hour, compared to the 4 hour. So when you go down to any other time frame other than the daily time frame, make sure the signals on the rejection indicator are matching your daily bias. Okay. So here, this is one example of yesterday. So now we're getting into the other steps of this rejection strategy. So use together with the SARs on the daily time frame. If your daily bias is buy, set rejection to sells and vice versa. The purpose of doing this is so that the rejection can act as a warning that the daily bias may soon be changing. Okay, so we've already gone over step 1 in depth, and nobody had a question on that so far. So number 2, we already went over those settings. So number 3, that's where we are right now on the hourly or 4 hour. Number 3, if your daily bias is, for example, bullish, which currently right now for gold, as of yesterday, my daily bias was still bullish. So if your daily bias is currently bullish and you're still within the weekly threshold. So when did my daily bias change to bullish for gold? It was at the beginning of yesterday. So I'm only 2 days old into my bullish bias on gold. Okay, so that's fine. So what this means is you can use the rejection signals to take trades. So for example, if your daily bias is bullish and you get that short-term retracement to the downside, apply the rejection indicator and set it to buys only on the 1 hour or 4 hour time frame. So also this trickles down on the 30-minute or 15-minute. So here, if we go back to this hourly, at this point, I was biased for buys on gold. However, we got that bottom retracement. So here, my rejection indicator is set to buys only, because on any other time frame but the daily time frame, the signals should match your bias. So here, what you're looking at, you want a buy signal, but you also want what? You want the buy signal to be in the green zone of the HAL moving average. So for example, here, I said during this move to the downside yesterday, my daily bias was bullish. However, most of the SAR entries on the 4 hour, 1 hour, 30-minute, and 15-minute, they got invalidated. Okay. Now here, there was a buy signal that showed up here. So this rejection buy, as much as it's within, so it's within the green HMA level. So the HMA is not red when this buy is being formed, which is perfect. So keep in mind, compared to this other buys to my left right here, these buys are showing up when the HMA is red. But this buy showed up when the HMA is green. So if let's assume this buy showed up when the HMA was red, it would have automatically been invalid. But it is valid given that it showed up in the green. However, right, pump your brakes, that's not the only rule right there. What's the other rule? The other rule is make sure the signal is forming within the HMA. You want a signal that forms above or below the previous high low. Now, and this is where also a difference in the daily candle comes in. So here, if price is rejecting to the downside, and you get, so let me just replay this. It's probably better to get it in replay mode. So here, the idea here would have been, if you get a buy signal of the rejection, you want it to also be rejecting on an SAR. Now, here's the only time I can tell you guys, it doesn't have to be a double SAR. It doesn't have to be a triple SAR. So here, what you would start looking at is, where is gold likely to go? So gold is likely to go either here or to go either here. So this is one of these times you can consider single SARs by themselves, because here you're looking to use the rejection indicator as your entry. You're not looking to use a double SAR as your entry. So let's get that clear. So this is the point where, so keep in mind, I told you, I don't recommend taking rejection entries on the daily time frame, but I do see use cases where the rejection entry can be taken by itself but you have to have it reject off of a single, at the very least, a single SAR. So here, what you would want, if we keep replaying the chart, the bars, so you want to wait for a buy signal. Now you get that buy signal here. So one thing you want to keep in mind, and which is, I'll also go over what's happening with EU right now. So one thing you want to go over, as much as this could have been a buy, one thing I found, and keep in mind, I've spent 15 hours back testing this. You want to consider, is this the lowest candle of that retracement? Because here we are still biased for buys on gold, but this, we are just considering it as a minor retracement. So you want to ask yourself, so same thing, whether this was a 4-hour candle, you want to ask yourself, is this, in this minor retracement, is this the lowest candle of this retracement? If the answer is yes, do not take that trade. So keep in mind here, I'm not talking about a break and continuation of a single SAR. I'm not talking of a double SAR. I'm not talking about test and rejection. I'm talking about how to enter trades using the rejection indicator by itself. But you need a supporting SAR. So whether it's a double, whether it's a single, that's fine, but it has to be at least a single. So at this point, you go ahead and say, okay, this is a minor retracement. Okay, the rejection indicator is telling me possibly we are shifting back to the upside. Okay, the HMA is green. Okay, not bad. But I asked myself, is this the lowest candle of this move to the downside? If the answer is yes, stay out and wait for another one. The beauty about this rejection signals, they don't take too long to come. It can stay, it can come in this candle. It can give you that rejection to the upside and give you an entry on the next candle, So for this ones, I've found this one to be a nice indicator to give you that sell at the top and buys at the low. So don't worry, don't be chasing something, and I'll go whatever is happening on EU right now, and I'll talk about that as well. So here I would have waited. So I would have already anticipated. So ask yourself, if this is a minor retracement, where is gold likely to retrace from? So possibly from this single SAR or possibly from this one. So wait for gold to get down here. Okay, for anybody who chose to take a buy there, look at what happened to them. Price sank down right there. Okay, so what happens when gold gets into this zone? Gold starts rejecting above there. Okay, does it break that single SAR? Nope. Tries to break it. Okay, then you get this buy. Look at this buy. This buy is so right. It's ideally away from this HMA, so it's like in a cup. So think of it like a cup. So here, this buy was on the side of the cup, but this buy was on the supporting, because the cup is below it, so it's like at that bottom. So you get this buy right here. So to me, the only reason I wouldn't have taken this buy is it came at 4 p.m. Keep in mind, I do not trade anywhere between 3 p.m. to 11 p.m. Eastern Standard Time. But again, you don't have to be like me. But this is an example of a trade that validated, and this is not based off of a double SAR. This is not based off of a break and continuation or test and rejection. This is purely based off of the rejection strategy by itself. So same idea, whether this was on the 4-hour, whether this was on the 1 hour. So here I said this rejection buy, as much as it's within the green HMA level, it's the lowest candle, or it was the lowest candle of that whole move to the downside, because you also want to think about it this way. If you are trading the lowest candle of a move, where are you going to put your stop loss? A good rule of thumb is to put your stop loss below the previous high low, or below an SAR, or below what. But for any strategy out there, even if you follow ICT or something, he talks about, or most people who teach trading, they talk about putting your stop loss above or below a high low. So if you are buying and the candle you're buying is the lowest of the move up, which high low are you going to put it at? So you'd have to go far back on a move that already happened way back. Give me 1 second. Oh my God. Do you see what's happening here? I saw this. This is the opportunity cost right here. You guys can see this test and rejection, right? I know US 30, as much as we got stopped out, I know it was going to retrace back up. I wish I saw this. And if you guys see some of these moves during the live session, please let me know, because this was a nice move. This is, if you can see this, we have a double SAR right here. So this was a test and rejection. This candle tested, rejection. You enter there. Your entry relative to your SARs is about 20%. That is fine. So this, if I saw this, I literally could have taken it. But anyway, let me see, 50%. So keep in mind, do not chase any move. If this trade gets to where somebody who took it would be setting break even, just forget about that trade. So if this trade comes back down, before getting here, I might look to take it. But if it gets to 33,829, I will not be taking it. I'll call it a day. I'll forget it. But for me, this is the key thing about having a bullish, a daily bias. But yeah, so if some of you find some of these trades, feel free to interrupt me and I can come back and check. Anyway, so here, the beauty about this and this is the key thing, please be patient with this entry. So what this rejection signal, you get that by rejection. So the previous candles rejected off of a single SAR. Perfect. So at some point, think of SAR as structure. So they rejected off of a structure. That is perfect. Okay. Is it the lowest candle of this retracement? No, it's not. Is it within the HMA? What color is the HMA? It's green. Okay. For me, the only reason I wouldn't have taken it is the time that the trade fell in. But if it had fallen outside of those hours, 3 to 11, I would have taken it. But you can see this right there, full TP. And actually, it was the beginning. It was the beginning of this whole move up to the upside. It was the low. Well, it wasn't the lowest low, but that candle that gave you the buy signal, right, was one of the lowest candle of that whole move to the downside. I'm sorry, that whole move to the upside. So, yeah, so that is how you can use the rejection signal, the rejection strategy to trade with it by itself. So don't, let me see, to trade with it by itself, but you still need the SAR. So whether you are using it on the daily time frame, whether you are using it on the 1 hour time frame, whether you're using it on the 4 hour, on the 50. So what I've just demonstrated right here, it applies to the 4 hour, applies to the 1 hour, applies to the 30 minute, applies to the 15 minute, applies to the 1 minute. What I've just demonstrated on the 1 hour, what I've just demonstrated on the daily time frame only and only applies to the daily time frame. So here, now let me show you an example of the 15 minute. So unfortunately, gold did not come back to tap us in for the buy. I don't think it will. So the only entry, so keep in mind here on the 30-minute time frame, we also have a break and continuation up here. So this trade may actually move to the top up here. I don't think gold will come back. I wouldn't recommend trading, or unless you know what you're doing, I wouldn't recommend trading for the rest of the day. Keep in mind it's Friday, but this is another setup for gold. So here for US 30, okay, so on the 15-minute time frame, on the 30-minute time frame, personally, I'm not really going to be using the, again, I don't trade using signals, but I'm not really going to be using the rejection indicator on the 15-minute or on the 30-minute. Not that you can't use it. I know Livy in here was using it, and that's fine. But if you're using it, this is what you want to do. If you're using it, I recommend do not use it like how, so let me think of this. Let me think of how to phrase it. Okay.
Only if it lines up with a double and triple SAR, not single SARs on lower time frame.
Perfect. Yep. So whatever Livy just said, if you're using it on a lower time frame, 30-minute, 15-minute, 5-minute, let it first find your double SARs, find your triple SARs, find that first before turning on the rejection indicator. Now here, this is also another beauty of it. If I turn on the rejection indicator, I'm pretty sure, and keep in mind, all of this I've coded using my logic. So for me, I'm able to trade using the indicators. But if I turn on the rejection indicator, I'm so sure there's going to be a buy signal here. So let's go ahead and turn on the rejection indicator. There it is. There's that buy signal. And let me turn off this so that we can go over the trade that we marked up right now. So this one right here, the reason you want to use it on the lower time frame, you want to first have your SARs marked up and not, so on the 4 hour, on the 1 hour, yes, you can find an entry for the rejection indicator by itself. But the reason you do not want to do an entry by itself on the 15-minute, on the 30-minute, and let me talk slowly so that I make sure I'm getting this right. Here's where the confusion comes in. For this trade right here, what do we have? We have a double SAR right here. So we have a test and rejection. So I know, Livy, like the other day, we were talking about how it was hard for me to come up with buy and sell signals for break and continuations or test and rejections. But if you've noticed, this indicator actually gives us those entries, right? I don't know if you've noticed that, like what I could have coded to
I didn't
give.
even look at it like that, but yeah, I see what you're saying.
Right, because right here, even without doing if I backtest this and do this, what do we have here? We have a double SAR right here on the 15-minute time frame. So if I'm looking at the candles that are coming down, this is my test candle. And then I want the next candle to close above this double SAR. That's test and rejection. So ideally, right, with how we were thinking way back, we should have gotten like a buy indicator right here. But anyway, this buy right here is not based off of the SAR. But yeah, Livy, I just noticed that the other day. So here, what you can use it for is if you're getting that confluence that I'm going to be buying US 30 here based off of this test and rejection, I would want to see a rejection signal in my direction. So I would want to see a rejection signal, possibly in the candle that I'm entering the trade with, or in the candles surrounding the trade. So here, I know, for example, if I'm taking this trade, my stop loss, yes, if I'm doing a 50 pip stop loss on US 30, I'm doing my stop loss is below the SARs, or my stop loss is below this high low. Now, the reason you shouldn't use it by itself here is, here's one reason right here. Reason you shouldn't use it by itself. What have I talked about before? I've talked about, make sure if you're doing the rejection buy on the 1 hour time frame, make sure you're within the green HMA. What's the color of the HMA for this buy signal? The HMA is red. So do you see how you can get confused if you use it this? So how you apply it on the 4 hour, 1 hour might be different on how you're applying it to this others at the bottom. So this is the key thing here. On the 15-minute or 30-minute, personally, I just turn it on. So I personally, on the 15-minute and 30-minute, I'll be considering it like how I turn on the markups indicator. So the markups indicator, sometimes if I'm buying and I turn on the markups indicator, I want to see a possible bullish order block. Or if I turn on the zones indicator, I want to see some buyers sitting down here. So I'm not going to be having it every time on my screen, if that makes sense. So on my screens, on the 15-minute and 30-minute, I'll still be trading with the double SARs as I do. But maybe sometimes before I click buy or sell, maybe I turn on the rejection indicator and then I see where the rejections are happening. But I'm not going to be using it primarily to enter trades in these lower timeframes. So
Coming back down, you gonna try to enter or not?
I would want to see US 30 come back up because this the other thing you want to watch is, so let's see what happens. So here we already know that there's a buy rejection right here, right? So if we do this buy rejection, you want to see so again, I'm not in this trade. So this is the original trade that I actually would have taken before if I'd seen it. So we want to see what's happening here, right? So we already know if we turn on the rejection right here, there's buyers here. So think of the rejections indicator also as momentum. So you know we have some buying momentum here. So we want to see how this candle, so this is a 15-minute candle. So let's see how this 15-minute candle closes. If it closes below this buy rejection right here, then momentum should shift to the downside, because here I'm almost sure too, if I turn on the sales inside the rejection, there'll be a sell signal developing on this candle. Yep. So here I would say, let's wait and see how this 15-minute candle closes. If it closes below this zone right here, I'm not going to take the trade. So I would want to see how this closes. So let me just put that. I'll delete this 50 since it didn't. So anyway, we have like I'm trying to delete this, just a second. Okay, so that would be the original trade. So I want to see how this 15-minute candle closes. I want to see how this 15-minute candle closes. So keep in mind, this trade would not be, this trade is still based off of the break and continuation. I'm sorry, test and rejection. But we're just looking to see. So in 1 minute, and we will see. Okay, so right now is when you ask yourself, what's the probability of this in the last 1 minute, US 30 flashing down to the downside? I'll enter this trade 0.3. If you're entering it again, 0.375% risk. It's a Friday. If US 30 stopped you out on the first one, again, you don't want to push it too much. Also, this is still like a new way of entering the trade, so don't really go too hard unless, again, you know what you're doing. So but here the red flag for this one is, right, I just talked about that probability game. We do not want any candle to close below this buy right here. So we want this to hold right here. If we get a closure below here, we already know there's sell momentum from the upside. So if we get that, if we get a closure below there, and let me turn off, let me hide this. My charts are getting too messy and I don't like that. Yeah, but if I turn that off, you know what I'll do? For right now, I'll just turn off, I'll turn this off and mark one SAR at a time. So keep in mind, you don't want a candle, this 15-minute candle, to close below there, below this zone. So I'll mark it one by one. And then I'll mark the original trade that would have been. So the original trade would have been this one. This is US 30 right there. The trade we entered is somewhere here, I think. I don't know. I don't know where you guys are, but I think it's somewhere there. So this is there as well. So this zone right here, you don't want any candle, any 15-minute candle. So also here, keep in mind, this is not based off of the rejection entry, right? I'm just having the rejection signals on the chart so as to show me momentum as we switch to the upside. But if you're trading, if let's assume right now you are trading the rejection signal by themselves, you wouldn't be in a buy right now. Why wouldn't you be in a buy right now? Because what's the color of the HMA? The color of the HMA is red. So until you get a closure above this HMA and the HMA to turn green, that is the only one. So keep in mind, this entry is not based off of the rejection. It's based off of this double SAR that's right here that did not achieve the 1:1 risk to reward for somebody who might have taken it. But if it had achieved that 1:1, I wouldn't even be looking at it. So yeah, so let me go over this EU trade and go over why it was also a minor red flag this morning. So this EU trade, but before I move to EU, is there any question about the 15-minute, the 30-minute, the 1 hour or 4 hour for the rejection vis-a-vis the SAR before I move over to EU? Okay, so for this one, so what I want to go over with EU, I need to resize this. So what I'll do, I'll delete this. You know what, I'll just draw gold drawing some other time. Change this back. Wait, just a second. Trying to make this, man. Anyway, maybe it's somewhere there. Okay, so for this EU trade, let's go over this EU trade real quick. So what time frame is this EU trade? It's on the hourly time frame. Okay, perfect. So I haven't done anything with the tests with the rejection rejection indicator yet. I haven't turned it on. So keep in mind, this is 1 hour, 4 hours. So my primary my daily bias for EU is, so I come here, because there's something I want to go over with this EU trade. And there's a reason I actually entered it. I wanted to see how this is playing out. So here for EU, the daily bias is bullish. Okay. So if the daily bias is bullish, my rejection signals should be showing sells and not buys, because the importance of that is so that it can tell me when the buy momentum is shifting. Now here, the daily bias, I started being biased for buys on EU on Wednesday. On Thursday, we had a sell momentum, so sell rejection right there. Keep in mind, this is on the daily. But for me, I am still looking for buys. The reason I'm ignoring the sell is that I consider this a short-term retracement, which is expected. So I'm not going to stop looking for buys because the sell has occurred within 7 days since my bias changed. Okay, so here for EU, I already know my daily bias is bullish. I'm ignoring this sell rejection right there. Okay, then I come in here on the hourly time frame. On the hourly time frame, what am I looking for? I'm not looking to enter a trade based off of the rejection as of yet. So here, so this is Thursday, and I can show you where the rejections were. So the same thing with gold. So let's first start with the rejections. So this was CPI. Let's see when CPI was Thursday yesterday. Okay, so this was that move to the downside yesterday, similar to what we saw on gold. So here, if we turn on the rejection indicator, so I was biased for buys on gold right here. So we had that downtrend. So same thing for gold. As EU came down, it took off all the double SARs that had marked up and invalidated them. Okay, how would you have traded it? So let's first start with the rejection entry, and we'll go to this SAR entry that I took at the bottom here. So the same thing with gold yesterday, or the same thing with gold that I've just gone over. So this buy that happened here, yes, when this buy flagged, it came, the HMAs turned to green right here. So the HMA turned to green, and it was also rejecting off of a green SAR, not as well as I would have wanted to, because of course, if you're trading a rejection to the upside for a buy, you want the candles to close above that SAR. So here, sure, but for me, is it a trade I would have taken? Happened at 10 p.m. No, it's not a trade I would have taken. Because I don't like this rejection. B, yes, the HMA is green, but I want to trade an HMA that's within. I want to trade a candle that's well within that HMA. So for me, this is just a bit of red flags, if you ask me. Now, if it comes down here, and also at this point, this candle was the lowest candle. The candle that gave you that buy signal was the lowest candle of this move to the downside. So this is where patience comes in. And I'll show you guys too on that EU trade, which is also a reason I chose to just enter it. This is patience. Using this rejection indicator will give you it will reward you pretty nicely. Now here, for this one, personally, I just don't like the structure. I don't like the rejection it's happening. Also, it's the lowest candle of the move to the downside. So I just keep waiting. So the same thing that happened on gold, it landed on this single SAR right here. So when it landed on this single SAR, it finally fired a buy signal, and it wasn't the lowest candle. The candle before it was the lowest candle as of that moment of that whole move to the downside. So, and what time did it show up? It showed up at what is this, 3 p.m. So I don't take trades between 3 p.m. and 11 p.m. So for me, it's not a trade I could have taken. But if you did take it, it went slightly into profit. So for EU or for FX pairs, I do, and for that US 30 trade, I got stopped out as well. So for FX pairs, I do 25 pips stop loss, 50 pips TP. So let me save this real quick as EU. EU. So here, yes, it's for me, it's not a trade I would have taken, but if for you, because there are people who actually trade Asia session. For me, I just don't like trading Asia session. So for here, actually would have hit full TP. Yeah, because at this point, when you are up 25 pips, you should have set break even. Once you're up around this point, trade should have been at break even, and then you would have held and trade would have gone straight to full TP. So that's an example. So here we haven't traded a double SAR. Here we've only followed the rejection strategy for entry. No double SAR, no triple SARs. This is just the rejection entry by itself on the 1 hour time frame, and that's the same thing you would do on the 4 hour. Okay, so what just happened with EU? So EU this morning, I saw this. I saw a test and rejection of a double buy SAR zone in the direction of daily bias. So when I saw this, and that's why I asked, oh, that's another group I'm in right there. That's another reason I asked Steven in the morning what he was looking to do on EU. So I asked Steven, right, thoughts on EU. So at 7:40, the reason I was asking, so Steven is, if you ever have any questions about EU, just post in the group and tag Steven. Steven is so good at trading EU. You know, that guy, he's a much better trader than I am. And that's why we call him our market maker. But that's why I asked Steven, because to me, so ignore so let me turn off the rejection for now. So this rejection, what I was looking for here, this was a test and rejection of a double buy SAR zone in the direction of daily bias. So with the SAR strategy by itself, that was a valid entry. It actually went up to like 20 pips in profit. Nowadays, they're not really giving me even that break even. It's so crazy. So it went up like 20 pips in profit. So I was waiting for it to get to 25 pips, which it didn't, and just reversed. And even on the live session, I was telling you guys, I'll hold it whether it hits TP or break even or stop loss. So for me, again, this was a personal trade I just took on myself. I didn't tell anybody to take it. So this was just one I took. Now for this one, again, how can you use the reject? So same idea we were doing on US30 on the 15-minute. If I'm taking a buy right here based off of this double buy SAR, if I turn on the rejection, I'm not using the rejection entry to enter this trade, but I would want to see some rejection from this double buy SAR zone I'm trading in. Now, here's the other thing I was looking for EU. EU and well, let me first finish with what I'm going over. So here, when I entered, I liked how I was seeing that buy rejection candle right there. But unfortunately for this trade, I think even for me, I got stopped out of this trade as well. Now, so ignore, so let me go ahead and take this off. So something I was looking at here, you see what was happening with EU and gold. So you look at where the buy is. So I wasn't actually looking to trade the test and rejection. And which is why I just had to bite the bullet on this. I wanted to test this out. I wasn't actually looking to trade the test and rejection. I was actually looking to trade the test and rejection. I wasn't looking to trade the test and rejection SAR entry. I was looking to trade the buy rejection by itself. So forgetting anything about this double SAR right here. So here, if I was looking to trade the buy rejection by itself, what was a red flag of this trade? So let me replay this and go back to that specific candle. What's a red flag of this? If anybody can, right, if anybody sees it, let me know what a red flag. So for here, we're not considering the SAR entry. Here we are considering the rejection entry that we've gone over. What's a red flag of this particular setup right here? As much as we have a buy, what's a red flag?
Red HMA.
Okay. What's another red flag? So the HMA one, yep,
It's the
you're right.
lowest candle on the
Perfect.
what you want to call it?
Right? It's the lowest candle of the retracement, right? It's the lowest candle of the retracement. So here, at this point, even for me this morning, I got conflicted, but I just decided to take it. If there wasn't a test and rejection of a double SAR, I wouldn't have taken it. So for me, I didn't fall into the trade. I took it based off of the test and rejection of a double buy SAR. So that's fine to me. But here, if I was taking it only based off of the rejection strategy by itself, two red flags. The color of the HMA is red. And also keep in mind, sometimes in these hourly timeframes, to me, I can see a use case of taking a buy when the color of the HMA is, so for example, that red trade. Give me 1 second. Let me go here. I want to check something for you guys. When was that buy on gold? Okay, yeah, never mind. Okay, so that's fine. That would only apply in the daily, so forget I said anything. So here, red flag would be the HMA color is red. Red flag, this is the lowest candle. So always ask yourself. So I think one of the most important things also of the rejection, I think the major rule, when you're getting that buy or that sell signal on the candle you're trading, and you're trading the rejection strategy by itself, ask yourself before you take anything else, ask yourself, is that the highest candle of that move? Is that the lowest candle of that move? Now here, this was the lowest candle. It satisfied almost everything else other than the HMA and the high-low, because it also satisfied rejection of an SAR zone. In this case, it was a double. But here, you want to get a buy candle that's within the HMA. So now going forward, what I'll be looking for, now you see, right, candles have started being inside the HMA and inside the green HMA. But you can see, right, we've started having breakdown to the downside. So what I'm going to be looking for personally here is between either today or Monday is EU on the hourly time frame to have a buy signal and off of the rejection strategy by itself, to have a buy signal on the hourly time frame, such that the candle that gives me the buy signal is not the lowest candle of this move to the downside that we are seeing, such that the buy signal candle that's showing up is above the HMA, and at that point I'll be taking it. So you can see the importance of following the rule. Make sure it's not the bottom of the move. So here for me, I'll just wait and see if we do get a candle, a 1 minute buy, a 1 hour buy candle off of the rejection indicator that's above the HMA, so that the HMA is green for me, and also that the candle is not the lowest candle of that move. So whatever happened here, so ignoring the trade that I had taken, and it was only based off of a test and rejection, but ignoring that SAR entry, if you're only taking the buy based off of the rejection entry by itself, this candle had some red flags to it. So just make sure you understand that. Start time frame by time frame, because even for me, again, this strategy is what, 1 day old or something. For me, I'm still having issues with it, to be honest, like trying to interpret this time frame by itself, or this time frame by itself. But the key thing is that first note that the daily has its own way to apply the rejection that's totally separate from everything else on the lower time frames. The 1 hour and 4 hour time frames have their own way of applying the indication or the entries. Also, the 15-minute and 30-minute, they have their specific way of applying to them. So, but I would say if you're using the rejection indicator on the 15-minute and 30-minute, don't use the rejection indicator to trade by itself. Have the SAR as the primary and then use it as a confluence. On the 1 hour and 4 hour timeframes, you can use the rejection strategy by itself to enter trades, regardless of the double SAR or triple SAR, but just make sure you have at least one SAR. So in the 1 hour and 4 hour timeframes, you can have the rejection strategy as the primary strategy of entering trades and your SAR as the secondary strategy. But in the daily timeframe, in the 15-minute and 30-minute timeframes, the SAR strategy should be the primary strategy when the rejection strategy is the secondary strategy. And I may have to rename it. I think I may be confusing reversal and rejection going forward, but I may have to rename that. But let me know if you guys have any questions. We'll be using this on the live session, so you'll be seeing it in action. And if we have some trade ideas, I can be sending them in the group. But yeah, let me know if you guys have any questions on that. So yeah, so for me here, that stopped out on that US 30. So here, again, keep in mind what I've just given you guys is just the way I apply these strategies for you guys is in a way that does not or shouldn't be confusing to start off. So once you start learning how to use them, there's use cases for trading both buys and sells. Keep in mind, for me, I'm a directional trader. I trade with a trend. I don't take both buys or sells. There are traders out there that do both buys on sell or both buys and sells. Like here, right? I just showed you guys this week rejection to the from the upside. We do have a sell that popped up there. So for anybody who was looking for sells, right? Same thing. You can use this as well, but just find what your niche is. Don't just follow me right blindly, because here we took what 0.375 loss, 0.375 loss. So actually this I should update to minus 0.75. So we can take like what we can take this and we can be done with the live session. But guess what? After the live session, I can trade by myself and make up that loss that I just, but for me, I'm done for the day for today. But after the live session, I can trade by myself and make 3% for the day. And then somebody who only takes the trades that I take might be down for the day. So this is just invest the time to learn and backtest. See what I've given you. If something that I've given you does not make sense after you backtest, take it away. You don't have to do it. It's not the holy grail, right? I've just showed you can lose while using my strategy. No strategy is 100%. The key thing is learn the strategies so that if you take a loss, for example, with me on the live session, after the live session is over, you can go back to the charts and then you can analyze and see, okay, maybe there's an entry here. And if you do see that entry there and you're not sure, I mean, shoot me a DM or post it in the group and ask me, Livy does this, Even Invest does this. A lot of people, even some people who are not really active in the Discord, they send me like DMs personally and ask me, is this double SAR valid? And then I'll get back to you and tell you, oh, maybe this is why it's not. So, but if you just rely on taking the trades as I do on the live session, we're not going to win every trade. And, but anyway, even if you choose to do that, just make sure you're using the risk that I tell you to use and do not use anything else. So anyway, for me, I'm done for the day. I'm done and down for the day. I think I'm down, for me, I'm down like 1.5 for the day. So that's my threshold. I've met my threshold. So for me, every day, if I lose 1.5%, I'm done. I'm not going to trade anymore. Even though I see another setup, that's it for the day. But let me know if you guys have any questions and we can go over them.
Well, just two things. So, on the hourly, when you said don't the two red flags. So the first one was the HMA was red, and when you said don't trade the candle at the what's it called?
Whether it's at the low or the high of a move.
Yeah. Oh, what does that mean?
Okay. So for example, here, I'll just draw this. So forget about candles. So I'll just draw something that looks like this, something random, right? So let's assume you're looking for buys on some instrument, and then you have this happening. No, that's not. So you have something like this. So let's assume you're looking for buys. Let's assume you're looking for buys, and then you have retracement to the downside. You know what? Let me just use candles. This is not going to work. Let me go here. So let me go to the daily. So this is a clinch. I'm not even going to put the indicator anywhere. So let me go to the hourly. What was that? Gold or EU? Whatever. I'll do gold.
Yeah.
So I'll do gold right here. So let's assume. So let's go over what we just went over for gold, but let's just forget about putting, I'm not even going to put the indicator. So this is just a naked chart. So I'm looking for buys on gold. I'm biased for buys on gold. Here, whatever, I want to wait for a buy to fire on the signal, on a candle. So I want to wait for a buy to fire. So here, if a buy came up on this current candle, I wouldn't take it. Why is it? Because this is a move to the downside. Gold has become bearish. If I get a buy here, I'm not willing to take that. Primarily, I can also tell here that at this point, the HMA was red. So, but you're good with the HMA part, right?
Yeah.
Okay, so here, if a buy fired here, this is the beginning of a down move. This is the lowest candle of this move to the downside. It's the first and it's the lowest candle. So it's candle number one and it's the lowest candle of that move. So it's 100% of 100% or 1 of 1. So I keep waiting to see what happens. If I get a buy signal on this candle, again, it's the lowest candle of this 2 candle move to the downside. Are we together till there?
Yeah.
Okay, so I'm not considering whatever is here to my left. No, I'm considering the move that's clear that has started to the downside. So I'm not considering previous moves. I'm considering the current trend. Okay, so here I'm still looking to buy. I'm not looking to buy based off of a double SAR rejection. I'm looking only to or double SAR entry. I'm looking to buy using the rejection strategy by itself. Okay, so I keep waiting. Okay, if I get up, if the rejection indicator gives me a buy here, am I taking it or not?
No.
Okay, perfect. Because again, it's the lowest candle of this move to the downside. I keep waiting. So the next candle right there, if I get a buy, same thing here. I am not taking it. But here, I can start seeing, you can start seeing some rejections. And I'm almost sure this is that one candle that was on the side. That didn't have this, if I'm not wrong, if we go to that hourly time frame, yeah, this is this little candle. If I turn on the HMA, that's that little candle right there. So here, if right, and which is why for me, I'm able to trade without these indicators. So here I can tell that this is a candle that the HMA at this point started turning green. But what's a red flag of this candle? Is it the lowest candle of this move?
Yeah.
Okay, perfect. So I say, as much as I really, really want to enter this trade, as much as, right, and keep in mind here, we're not talking about the SAR entry, we're talking about the rejection entry as primary, as the one primary. So here I can see a lot of FOMO happening here. It's like, oh, maybe this is the time gold is reversing back to the upside, but look at what happens. Comes back down, and the next candle would have taken you out if you decided to FOMO that, because here you wouldn't have taken this because it was the lowest candle of the down move. So the reason you want to look, if it's the lowest or the highest candle, you want to protect yourself against manipulation. So here, what happened here is manipulation or just price went against you. So I'm trying not to use the term manipulation anymore. So here, would I, if I buy, so assuming, so let's assume here a buy fired on this next candle, which it didn't. I don't think it did, but let's assume a buy fire. Yep, it didn't. So let's assume a buy fired on this next candle. Would I have taken the buy?
No.
Why? Okay, let me put it this way, or let me add something in here. So let's assume a buy fired on this candle and there was a SAR there. So keep in, because for the rejection entry, you want an SAR, you want a rejection. The only difference is that it doesn't have to be double. So let's assume there was so let's assume there was a SAR right here. Would I have taken a buy there on that candle?
If it rejected off that SAR, then and so if it rejects off that SAR and there's a buy that's fired on the rejection indicator, then yes.
Okay. Okay, so that's one thing. Why else would I take that trade? Or I'm not saying you should take it, or I'm not saying you shouldn't take it. Why else? So remember what we've just talked about. And this is how you can also start fashioning your mind to trade without indicators. What's another reason you can take that trade or you shouldn't take that trade? So remember the requirements, right? I'll put them here. And the answer is what? The answer is in point number 3. So the answer is in point number 3. So what's another reason that you should or you shouldn't take that trade?
Yeah, the daily bias is still bullish. That's right, isn't it?
Yeah, so the daily bias is still bullish. So why should you or should you not take a buy? So here we are looking for buys, right?
Oh yeah, so the bias is bullish.
I mean, yeah, I mean the bias is already bullish. So we've been looking for buys this whole time. So what's another reason you should or you shouldn't? So the answer is in number 3 right there.
Oh yeah, you should follow the daily bias.
No, so that's not what I'm looking for. So something else. Number 3. Number 3 has 3 paragraphs. What's another reason you should, or if a buy fired on this candle right here, and yes, it rejected off an SAR. Okay, think of it this way. What are the rules of entering the rejection strategy? And we've been going over it, this whole move to the downside, and you've been giving the answer. Anybody? If a
There's no SAR there, right?
No, so let's assume there's an SAR here. So this blue line, let's just assume this blue line is an SAR. Of course, in the real life, there wasn't an SAR there for gold, but let's just assume, I'm just trying to show like how I could have taken this trade if I took it. So let's assume the blue line there was an SAR. Why else? Yes, my daily bias is bullish. Yes, it rejected off of a SAR. Why else would I have taken this trade?
I don't see the HMA.
Okay, so that's one part right there. You'd look at the HMA. Okay, assuming the HMA was green. So again, this did not happen like in real life, but I'm just simulating a trade for you guys. So forget about like what happened here, even though yes, in real life it was within the HMA, right? Because it's this candle right here. Why would I have taken this trade if a buy signal had fired here, which it didn't in real life? But let's assume we had a buy signal here. Why else? Daily bias is bullish, yes. Rejected off of an SAR check, yes. Was inside the HMA and HMA was green, yes. What else?
Did you say something about the high low?
Okay, what about it?
What was it?
Above the previous high low.
Mm-hmm.
Above the previous low low.
Okay, so
That's it.
So in this whole move to the downside, is this candle, and again, this is a simulated trade, it didn't happen that way. Is this candle that fires a buy signal here, is this candle the lowest candle of this whole move to the downside?
Oh yeah, it is. No, wait. Is it?
I don't know. Is it? Is it the lowest candle? Because keep in mind, here is when the candle closed. So if I click next, it's not gonna go low. Is it the lowest candle of the whole move?
It is then.
It
Oh
is?
yeah, it is.
How is it the lowest candle?
You're talking about you count the wick too, then no.
Yeah. Okay. So yeah. So I'm talking about the highs and lows. So I'm not, because bodies count open and close. So I'm talking about the highs and lows of a candle. So is it the lowest candle of the move to the downside?
No.
Perfect. Right? Because the previous candle is the lowest candle of the move to the downside. So this whole time we were coming down, each candle was the lowest candle. So I'm not counting so keep in mind how the structure of a candle, bodies only show you the opening and close of a candle. The wicks show you the highs and the lows. So there are times when, yes, the body can be the high and can both be the open and high or low or vice versa. But in most instances, candles will have wicks. The wicks tell you the high of the candle and the low of a candle. So which is also for me why in SARs, I don't count the bodies, right? In SARs, we look at where the candles closed. We don't look at the highs or lows. But in this one, you want to make sure that the candle is not there. In this instance, you want to make sure that the candle would not have been the lowest. So if a buy signal had fired here, for me, I would have taken the trade because it would have, again, this is a simulated trade, because if we go to the actual trade setup right here, you can see there was no buy that formed on that particular candle, right? But if a buy had formed on that particular candle, Personally, yes, I would have taken the trade, but you can see here, of course, there's no, so I'm just simulating like a perfect scenario for you guys. So are we together till there?
Yeah.
So do you understand now the high-low part? So you're not looking at the bodies, you're looking at the wicks. In the SAR strategy, that's where you, I can see, okay, I see where you guys are. Okay, in the SAR strategy, yes, we look at the bodies. In the rejection, okay, so yeah, it's actually good you brought that up. Yeah, in the rejection strategy, we are looking at the wicks when we are determining the high-low. In the SAR strategy, we are looking at where the bodies are closing relative to the SARs. Okay, so I get the confusion. Yeah, so here, for the for the rejection entry, we are looking at the wicks. So we are looking at the high lows. For the SAR strategy, we are looking at the body closures.
That makes sense. Yeah.
Yeah. So, yep. So that makes sense. So, so at the very least, when you do see a buy or sell signal on the hourly or 4-hour time frames, ask yourself at the very, very end of it all. So ask yourself, what is the color of the HMA? Is it rejecting off of any SAR? It doesn't have to be double, doesn't have to be triple, but at the very least, 1. And then ask yourself, is the low of this candle, so the wick, is the high or low of this candle based off of the wicks, is it the highest candle of this move to the upside if you're looking for sells? Is it the lowest candle of this move if you're looking for buys? If it's the lowest candle and you're looking for buys, wait for another rejection signal on the same time frame that will give you satisfy the rule of that candle not being the lowest. If you're looking for sells, wait for another candle that's going to be not the high of that move to the upside. Does that make sense?
Yeah, that makes sense. And on the, on the daily, when you were saying, on the daily, yeah. So if we look at like gold, for example, when you change the daily bias to bullish, the buy that fired right at the bottom on the rejection, for the rejection, that buy right is warning you. Now the thing is, I know it's come like how many days after that how many days did that signal fire after our daily bias was bearish? So with the
so here the daily bias officially changed from bullish to bearish September 6th. Wednesday, September 6th. So the time a buy that fired that warned you that I would have considered to be a probable warning, not this 1, 2, 3, 4, 5, 6, 7. So this 1, 2, 3, 4, 5, 6, depending on if you're counting the day of. So if you're counting the day of, sure, within the week. So this buy on Thursday, September 14th was 6 or 7 days, give or take, right from the bearish, from the day the bias changed to bearish. Okay, so this was a valid one to tell you maybe chill on it. This first 2 or 3, this ones I can definitely tell you that these ones were a no-go or invalid. This one here, this buy right here would also have been a good warning to maybe chill on the sells until you possibly got a sell signal, which I'm pretty sure came the next day. Yeah. So just make sure it's 7 days. So just count the days. If you want to count the day of, so start counting the day you got the day the bias changed. So 1, 2, 3, 4, 4, 5, 6, 7. So if you count the day of, so you'll get your 7th day. So here, so technically here, between this bearish day or the bias change and the other bias confirmation, the bias never changed to bullish before coming to bearish. The bias changed here to bearish, did not close to bullish, and then continued bearish. So here we start counting again. 1, 2, 3, 4, 5, 6, 7. So as of Wednesday, October 4th, relative to Tuesday, 26 September, when honestly, I don't consider it a bias change, because here, what just happened, the bias continued, if that makes sense, because we never, So here, but if you want to just be specific, sure, you can call it a bias change. So you count 1, 2, 3, 4, 5, 6, 7. So at this point, I would have made a ton of money selling gold here, which I did. But at this point, any buy that shows up after this 7th day, then maybe I'm like, okay, chill. Let's see what happens.
That's true, yeah. So on the 8th day, on the signal
so
fired.
On the 9th day, not on the 8th day. Also, which is why it's also key about looking at, when I tell you guys the low of a candle, the low of a move down, and keep in mind when you're looking at the low of a candle, the more you go up towards higher time frames, you might not get the low, because keep in mind the daily here, this does not satisfy the daily candle that fired the buy signal here was the low candle of the move, right? But you also have to keep in mind a daily candle has 24 1-hour candles. A daily candle has 6 4-hour candles. So of course, you're not always going to get that quick rejection and having, like, for example, here, having that daily candle to be not the low of the move up. So which is why here I normally tell you guys, make sure don't take buys and sells on the rejection. Don't take buys and sells based off of the rejection strategy on the daily time frame. Don't do that on the daily. Do that on the 4-hour, do that on the 1 hour, because on the 1 hour and 4 hour, you have a lot of price movement compared to the daily time frame. So here you can see on the daily time frame, the rejection signal, it satisfied, yes, it was above the HMA. There was no SAR here. I don't know. I don't extend SARs on the daily. So which is another reason why I'm telling you guys, don't use it on the daily time frame. Because here, I normally say, make sure it's rejecting off of an SAR. I don't extend my SARs on the daily time frame, but let's assume, so let's see if there was, if you want to do that, because I know there's still people who, I should have asked him to include the SARs in here.
What's the problem again? Like, what's the bad thing that we shouldn't do?
Give me 1 second. For what?
So you said
So if you extended the SARs, I'm sorry, give me 1 second. If you choose to extend the SARs on the daily, yes, there was a rejection off of a green SAR. So here, if you are trading, so forget about so assume you're taking the trade based off of the rejection strategy on the daily. So here, a red flag of this trade, of this buy signal that popped up here, as much as it was a good buy from the bottom, yes, it was within the green HMA. Yes, it was within, it had rejected off of an SAR. However, this candle, the low of that candle was the lowest of that whole move to the downside. So that was another, for me, I consider the high low of a candle being the major determiner on if you should take a rejection trade or not. So for me, I consider that's the last thing I will look at. But on the daily, I'm saying the daily you can get away with it, because daily candles move slower compared to 1 hour and 4 hour. So daily you can get away with not, but right, also backtest and see what could have happened, because you can backtest and see maybe here you bought. Anyway, in short, I don't even, because it's just confusing my mind, I don't want to try buying using the rejection entry off of the daily time frame. So I'm not even going to, it's just confusing enough. So anyway, daily time frames, I do not extend my SAR. So, and I don't recommend you guys to do the same. There's so many entries on the 4 hour and 1 hour. Yeah, but anyway, so here the goal of this, the buy showed up on the 9th day after your bias changed. So the goal here is that, hey, chill on the sells for now, because a buy SAR is probably coming up. And guess what? 2 days later, the buy SAR comes up. So you're only sacrificing profits for 1, 2, 3 3 days, and look at here, you'd be up in profit if you're taking gold buys, because there was a lot of entries for gold buys, whether you're using the EA or whether you're using the double SAR. So here, the determiner for this will be greed, because I can, even for me, right? Even for my own EA, but for my own EA, it went back into the starting equity because I'm just stress testing it, and I'm trying to see how far I can survive drawdown. But here, I mean, can you just imagine if you were making money for 2 weeks straight selling gold, and then here the rejection SAR wants you to just chill, like you've literally made money 14 days in a row, and then here it tells you, hey, chill, maybe it looks like a buy SAR may be forming in the next 3 days. So all it's telling you is that, hey, you're already up 6%, 7%. Don't risk drawdown or blowing your account just to have a little bit more money for another 3 days. Because guess what here? After that buy formed and you kept selling, burnt. But if you just waited here until that daily buy has formed, look at how much money you'd be up right now on gold. So on the daily time frame, the purpose is just to warn you. So you're not looking to trade the rejection entry on the daily time frame. You're not looking to trade it. The only time frames I can recommend you to trade the rejection strategy is the 4 hour and 1 hour.
Now, the buy where it fired, right? On the ninth day. So where it's telling you to basically like chill on the sells, like let's say then our bias is still bearish though. That's the thing. Do you get it? So if our bias is still bearish on the 10th day, the 11th day, and the 12th day, because the buy SAR still hasn't fired. I mean, it might have fired, but the daily candle hasn't closed. So remember how we were still selling on the 10th day, 11th day. So of course we'd be more careful with the sells.
Correct.
But, the thing is,
so you have that decision to make. It's either stay away from the markets for 3 days, and it's not a big, right? It's not a. I find it hard, to be honest with you. I'll be honest, right? I find it hard, but I think as a trader, you have to go to that point where you don't have to trade every day. Literally, you do not. So you just sacrifice. So if literally, like up here, even with my EA, I was up 6%. This whole move up here, 6%. That's 6K on a 100K account. But you can see if I go to the EA right here, it came back down to 100K, but it's only, and again, this is a demo, so I'm only stress testing the EA. If this was my live account at 6%, I would have chilled and waited for the buys to now show up. But the only reason it kept going down was because I wanted to see what can happen if I just keep following my daily bus every time without even stopping. So this is what happens when you follow a daily bus. Even when you're using an EA, the first thing you want to do when that daily bias fires, the next day, if you want to go hard, that's the time to go hard. Go hard on that first day, and then maybe for 2 days or 3 days, but then calm your settings down and you'll get this equity curve. So here, the reason it went from, so on the first day when gold, on Sunday, when we had that spike to the upside, the account went from 6.3 to what? No, I only lost like 3% because my equity guardian is at 3%. So I lost like 36. I think I posted it on the group. I lost 3,600 on that day. And then I was like, man, hey, I'll just keep doing it. So here on this next day, guess what I did? I turned on, yes, the buy SAR had started firing, but guess what I did here? I turned on the sells only again. Should I have done that? No. Like right now, I know if I ever use this on a challenge, I'm not going to do that. So, which is why sometimes do your testing in demo and stress test your settings and find whether it's even manual trading. So here, guess what I did? I turned on sells again. And then here, when the bias changed to bullish, I'm actually the one who closed out the sells. I didn't hit drawdown. So I was like minus 1,800 with the EA. So I lost like 3,600 on that first run and then lost 1,600. So that's what, 5,200 in total. So you can see, but today I'm up 1,464 just by doing buys only, right? So here, the thought here is that in future, what I'm telling myself is once I so have like a set target for each trend direction. So I aim to make like 4% per buy trend or sell trend. If I make my 4%, I turn off the EA or whatever, and then wait for the next sell trend to happen. So in theory here, if this was my live account, guess what? At this, even at 6%, I was pushing it. I should have stopped at 4% because by this one, by the time I was at 4%, it was, I think, one of these days right here. So I was so much in profit way before. So the idea here is that what you want to do as a trader, whether it's with the EA or with manual trading, know your limit, know your goal. So at this point, I think it was at 5%. So I would have avoided this 5. And then this equity curve that I'm getting from the bottom, this is what would be continuing. So right now I would be up. If this was a live account and I was trading it using that particular rule, I would be up like 8K or 9K. So that's 9%. And it's just by using that little common sense that, hey, I've been up 6%. And it was just in a matter of 3 days or whatever, however many days. I've been up 3% in 3 days. Why would I keep pushing it? And something is warning me that the bias might change. So again, for me, going forward, I'll only be using the rejection indicator on the daily time frame, not to take trades, but as a warning. Right, as a warning. I won't be taking any trades based off of it, but I just wanted to warn me. And for me here, the only way, so right now my bias is bullish. So I have to count 7 days from now. So 7 days from when was this day? 7 days from Wednesday is Wednesday, 18th October. So right now, since my bias is bullish here, of course, this should be sells. So here, I know I'll only be concerned about a sell that shows up after Wednesday, October 18th. Any other sell that shows up before then, I'm not interested in it. Right? Hopefully that makes sense.
Next Wednesday. Oh yeah,
next Wednesday. Yeah.
Oh, yeah.
So if a sell shows up on Sunday, I don't care. Sell shows up on Monday, I don't care. So right, it's I'm just considering that a short-term retracement, because after your bias changes, you expect some sort of retracement. So I'm just considering it a short retracement. I'm not considering it, oh, hey, we are probably having, and it's true. Yeah, maybe a sell SAR can form at the top, who knows? But it's just that game of probability. So you just have to do this, apply this on the daily time frame, and go back and first back test by buys only or sells only, and then back test when you would have gotten that warning, and then come up with your own threshold.
Yeah. One last thing is, before the rejection, before getting that rejection indicator, like you wouldn't really be able to, you wouldn't be able to tell. You could still, of course, tell how trade, but like before, we didn't really know. Like we wouldn't get that warning, right? Like how the bias could just change.
Yep. Yeah, you wouldn't, right? The only way you could have gotten that warning is if you went down to like the 4-hour time frame or something, right? If you went to the 4-hour time frame. But even for me, I found that to be risky, but I think this one is a much better warning. But yeah, just find a way that warns you. You can use the 4-hour SAR to warn you. If that works for you, you don't have to use this. So this is just to warn you that, hey, maybe this is changing.
And the 4-hour, the 4-hour, how I've seen a lot of traders, when they look at the 4-hour, they look at the high, the high and low, and then they look for, how you say, look for test and rejection, and they forget the SARs, like, like when they look at the lowest point and the highest point, and they look at where price will eventually go. So how would we how would we understand
that? Using, because you said that based off of what? Because for me, I wouldn't be able to talk about how somebody else does it.
Yeah, I mean, how how can I say? How even when we look at Stephen, for example, you see how he always looks at the 4-hour. You realize he always looks at the 4-hour. He doesn't look at the 1 hour all the time. He always looks at the 4-hour. Even other traders like I've seen in general, like on YouTube and stuff, they always look at the 4-hour. I don't know what it is about the 4-hour. What does it show?
So it depends on this, because Stephen just doesn't look at the 4-hour for no reason. So Stephen, based off of how I know he trades ICT ICT a good amount
Oh.
of ICT. So you'll hear him talking about like breakers, fair value gaps. So if you go on YouTube and check out ICT, I like ICT, and
Yeah.
I hear like his 2022 strategy is pretty good if you guys want to check it out. Yeah, but Steven, a good amount of the trading he does, it's based off of ICT's concepts. So yeah, so maybe he's looking for a breaker or an order block or a fair value gap. So you'll see Steven talk about like breakers, weekly fair value gap, monthly fair value gaps. That's probably why he's looking at the 4 hour. Also, Steven doesn't trade like a lot, so he's looking for those high probable entries.
Yeah, even like when you were talking about the other guy, what's his name?
ICT.
Yeah, what's that guy's name?
Oh, Q Banks. Or Kimmel Trading.
Yeah, that guy.
Yeah, Kimmel Trading uses ICT concepts as well. Yep.
ICT is better than it's probably better than SMC, isn't it?
I don't know. Everybody has their own way, right? ICT. What I'll say, ICT has opened the minds of a lot of people. So I'm not gonna say it's better. Even ICT, he's normally pretty transparent as well. He's gonna tell you, there are moments you're gonna lose with my strategies. So when you say better, right, what are you comparing it to? Yeah, is it better than not having a strategy? Yes. Is it better than blindly buying or selling? Yes. Right. So if you ask, is it better? It's always dependent upon what is it better in comparison to. So there are people, for example, there are people I know who only trade supply and demand. That's it. They don't trade fair value gaps. They don't trade ICT. They don't trade SARs. They don't trade rejections. All they do when price gets to, like right here, I can tell there's support here for the US dollar. When price gets to a support area, they buy. When price gets to a resistance area, they sell. And they will do better than some people that are doing ICT. So it all depends on how somebody is interpreting the strategies. So you just have to learn how a strategy is working, and then you just apply it.
Always forgets this guy's name. Damn it. Anyway,
Q-Back Swaggy.
Swaggy always says every strategy works. You know what I'm saying? And they don't. None of them have a 100% win rate.
Right? Yeah.
Sticking to a strategy. That's it.
Yeah, because the people are gonna come here and say, man, ICT, you cannot win. Here's why if we go on YouTube right now, I'm pretty sure you'll find here's why ICT strategies don't work. Right. But it's not working for them. But there's somebody who'll come and say, hey, I make like Kimmel. Kimmel makes a lot of money. And I like him because he's not in the level of Swaggy or Q Banks, but he's a big he's been trading since 2020, but the amount of money he makes compared to like Q Banks, and I'm not saying money is a reflection of how good you are as a trader, but the more you are in the game, like Q Banks has been in the game for what 10 years, same as Swaggy, maybe 15 or something. But the more you grow as a trader, of course, the more capital you start having. So right, I'm not saying money is a reflection of how good, no, but based off of how I've seen him trade, he has a good win rate, and he trades ICT and he swears by it. And there's also going to be like somebody like me, I don't know how to trade ICT. Not that I've never learned it. Actually, I want to start learning about ICT strategies. But for me right now, I'm comfortable with trading the SAR, right? Because that's what works for me. If SARs are giving me 10K a month, that's fine. I'm satisfied with that. So maybe I can learn ICT and start applying some ICT concepts as we trade, but I'm not going to be like, oh, I'm going to rush there. I can only rush there either to improve my knowledge or if I found that the SARs don't work for me, which is why I always tell you guys, if you find something I'm teaching you isn't working for you, don't stay around. You're just wasting time. Move on, find something else that can work for you, because that's also how I grew as a trader. The people I followed when I first started trading 3 years ago, I really don't follow them anymore, because as soon as I learned what I needed to learn from them, I moved on. Yes, I'm still in those groups, but I'm not as active. So make sure you're still learning week after week. But one of my goals in the next, maybe next year, is to learn some some of this I mean, I know what a fair value gap or something like that is, but when I talk about learning, I'm talking about like you can see it on a naked chart. Like right now on a naked chart, like I just went to the chart right here and I can analyze where rejection might be, etc., etc. So you want to get to the point where you can trade without indicators. Like ICT doesn't really use indicators. But I'm not saying using indicators is terrible, but you just want to get to a point where what if one day you don't have access to those indicators? Can you still trade? So
Oh
you want to
yeah.
get to that point, right? So I'm not
You
saying
know,
indicators are terrible, but right, they're good, but you want to start subconsciously conditioning your mind to also think how the indicator is thinking.
but then like the SAR strategy, like is it possible to trade it without actually having an indicator? Like just seeing it in your mind.
I don't know. To be honest, I don't know. I don't think so. But SAR, so SAR stands for stop and reverse, also stands for support and resistance. So another way to trade, you can trade it without an indicator, but you would be having single SARs, because here, for me here, I can draw one SAR right here. I can draw this one right here, possibly right here. I can just draw one because it's similar to support and resistance. But those doubles, I can draw doubles or triples or something. So that's
You can't draw. Yeah, you can't draw a live SAR.
And I can draw a live SAR, correct?
Yeah, so certain things we can't really do. It's like without an indicator. But I mean, of course, there's other strategies, but like certain stuff, like like the breakout, you can't do that as well.
Yeah, with the
I mean,
breakout indicator, you can't. This one you cannot, right?
can you do? Yeah, is it possible to do it on your own without an indicator?
Unless you
No.
even though the only other way I'm thinking, maybe use the EMA, but EMA is an indicator. Yeah, you can't. Yeah. So just focus on one thing and see it works.
That's why I was saying, like those guys like that do ICT and stuff like that, they don't use no indicators. They're just looking at the chart, and they always like draw up, like how you draw the zones, how we draw the
No,
zones.
a good amount of them use indicators. See, when somebody is doing a YouTube video I can do a YouTube video here and I'll go ahead and turn off. If you always look at this, even ICT actually has indicators on his chart. It's just that he turns them off because he's showing maybe a fair value gap, but it's because he has a process. Maybe he looks at the fair value gap, then maybe looks at the rejection. But if you look at the MT4s, the trading views of some of these people, you'll see, if you look at the number here, you'll see that they have there's a number here. You see what I mean? Because right now, if I hide this and I'm doing analysis for you and I'm drawing fair value gaps for you, yes, I don't have any indicators on my chart, but why do I have this here? So it means at some point, this person is probably looking at a 9 EMA rejection or something. So a good amount of them do have indicators. It's just that when they're doing the analysis for you, they may not turn on their indicators.
What about that guy? Like Raja Banks. Remember?
No, I know him, but I don't follow him. I follow people who are chill, man. I don't follow people who are all over the place. I try to follow. For me, I follow traders who are, I can tell this guy is humble, he's transparent. So I don't follow people who just say, oh, I made 100K this day, whatever. For you to be that level of a trader and I follow you, I have to look back and see where did you start from. Because if you came out of nowhere 2 years ago and you're saying you're making 50K a day trading, then I mean, I don't know your journey. So yeah, I've heard of him. I've heard crazy things about him. So for me, if I hear some negative stuff about a trader, I'm not saying it's terrible, but I'm just not going to follow you.
I mean, like, his like the strategy, like based off of candlestick candlestick patterns or something like that. So is that, I know that kind of strategy, like he won't really need to use indicators, would he? Or does he? Because he always talks about, the wick, and I mean how you talk about it as well, like the candle, for example. Like let's just say we're bullish, right, on a lower time frame. Like because these guys, especially, I think he's a scalper. I don't know really. I just heard about him, but like people that when they look at the lower time frames, and let's just say how we use the daily bias, for example. And let's just say we're bullish, right? He will look at the body how we look at it, but the way he would look at it is in such a way that the body, when it closes without a wick at the top, it will show that there's bullish momentum, right? So
Yeah,
he would
bullish
just,
engulfing.
yeah, like that. So he would just buy and sell based off of the candlestick patterns. That's what I've seen he does, and
Yeah.
he looks at the zones. Yeah.
So I
So
mean,
yeah.
it doesn't mean that he's better than ICT or something. It's just everybody has their own way. But yeah, I've seen, candle, even for me, I used to do that. I think you guys remember when I used to trade bullish hammer candles and bearish hammer candles, right?
Yeah.
So, and it was working. We had an amazing, I haven't done it in forever. I mean, I can possibly easily find one here, but I don't know. Yeah, and this is also a bullish engulf. So just find your niche in trading and stick to it. The only thing I'm against is, right, if you haven't understood one strategy and you hop onto another one, probably you're not going to get the other one as well. But just find, if something works for you, forget everything. This is what, right? You guys don't see me even trading the crosses indicator. I don't use it anymore because for me, the SAR works fine for me, as I don't use this. I don't use the break, but there's somebody who can join this group today and he will master the breakout scanner and he's going to do even better than I probably do with the SARs. But if you try to jumble up, then you can get confused. So so think of all these strategies I give you guys: breakout, reversal, whatever. Think of them as ICT breakout, ICT candle patterns or whatever. So think of all my strategies as like the different trading gurus out there. So each one has its own win rate. There's somebody that will come here, use the breakout scanner and get burned. But there's somebody who will come here and maybe find that, hey, for EuroCAD, I don't know, for EuroCAD, every end of the month, there's a breakout for a buy. I don't know. I'm just talking out of my mind. There's a breakout and this guy will only wait for that one trade at the end of the month, and he'll have a better return than myself that trades the SARs every day, right? So which is also why when I brought this rejection indicator, I told you guys, if you haven't understood the SAR, do not use it. It's fine. You're not missing anything. The SAR by itself is amazing, but you just have to find the niche first, learn about it, and then see how this rejection can help you. If you find it doesn't help you, forget about it. Stick to what you find, and that's it.
Yeah, man, that should be it. Yeah.
All right. Any other questions? Next week we'll see what happens next week. But I'll keep. So we might have a few, just as with any strategy, trading this rejection strategy, you probably have a few loss. Wait. There was this. See, this candle closed too high up. Anyway, no need to chase this. Next week we'll probably get a better move because this was the break and continuation. This trade validated all the way up here. This one you could have gotten faked out. So this is, so no need to chase anything. So next week, hopefully we'll get some good trades, but keep in mind, also be aware of, with a rejection for any new strategy, be mindful that you're likely to lose some money as you start trading it. So maybe if we are entering some rejection trades in the next week or two, use a demo account or use like very low risk. Don't enter that using your challenge or live account. Because even for me, for the SARs, the first time I traded them, I lost a lot of money and I was trading it on a live account. So, as we keep learning these new strategies, if we come up with a new strategy, the first week or two, take your time, use demo or use like a 0.01 lot size. Or if it's like this, like today on a Friday, instead of using 0.75 risk per trade, use 0.375. So, yeah. But other than that, damn, this live session was long. Well, I'll see you guys next week. All right, guys. Bye.
Bye.